All right. Hello, everyone. Welcome to your weekly market check-in here with myself, Greta Wall, your host, and I'm joined by Derrick Oldensmith, the head trader at T3 Trading Group and leader of T3 Live's Pro Desk virtual trading floor. Now, before we get into any market-related discussions here, here's a quick disclosure of Derrick's current positions as of our recording here today on March 9th. Derrick, there's a lot happening in this market and in the world. So let's just get right into it. How is your Monday going so far?
It's going well, P&L wise. I'm exhausted because it's a combination of daylight savings and oil futures being up 30% last night, which led to me getting my day started at 2:15 a.m. local time here in Idaho, which with the daylight savings, it's really like 1:15. So I'm hurting a little bit, but I'm sure glad that I got up early because today was one of those classic early bird catches the worm opportunities. Even after the market opened, you had a really good opportunity actually to still be able to nail some index longs. But for the best oil short prices, you had to be up really early this morning. And I was able to nail some USO short just in front of 125 very early pre-market because I was awake to do so. And, it's just today is like we always talk about how, or not we, but a lot of people like to talk about how, the market never makes it easy. It never makes it easy. Well, today they kind of made it easy. I know that there was one little like shakeout low in the SPYs at like 10 a.m. this morning, which maybe could have pushed some people out and triggered some stops that didn't trigger on the Qs. But otherwise, they really made this easy. Market with an extreme gap down this morning to my view of extreme downside extension in the SPYs. So we were, very significantly extended. Oil up huge, up massive. And just a lot of the information, I think when you kind of parse through it, some of the information that we're seeing coming out of the Middle East really led me to believe that the oil move was overdone. So it was kind of a layup to short oil and go long the market this morning. And Dow, as the market is continuing higher and oil is rolling down a little bit, just sitting here reaping the rewards of the hard work of getting up so early to start the day.
Yeah, that is an early wake up call, but definitely worth it because as you mentioned, oil overnight was close to $120 a barrel. Now we're under $100 a barrel. The major indices were down way lower than they currently are. The market, everything is still, well, not everything, but no, the NASDAQ is green actually. But the Dow and the S&P are still red. The NASDAQ is turned green. So a huge bounce back from the lows we saw overnight in the pre-market. So when it comes to those huge kind of swings in a market environment like this, where you see oil basically cut gains in half, by noon Eastern time, and the major indices, of course, rebound and get, strong. Tech turns green. How do you think about a market like in this kind of environment, and how do you navigate it as a trader when you can't really? There is no direction and there is no trend. It is very, volatile.
So at the index level, we finally had a breakdown of major support really starting on Friday that carried through with the huge gap down this morning that led to big downside extension. So I would argue that some of the best index level trading opportunity of this entire calendar year really came from today, because really up until Friday and today, we've just had this extremely tight range bound market. And now there's a good chance that we're actually going to head right back up into that range. But it was a great opportunity to be able to buy some stock. If you do the research on some of these geopolitical situations, the market bottoms when oil tops, more or less. So oftentimes that happens on the same day. Sometimes oil tops and the market bottoms the next day. But the real question this morning was, all right, oil futures were up 30% at a certain point last night. Now they're on their way down. Is that marking at least some degree of a short-term top? And if so, it's probably going to be marking some degree of a short-term bottom for the market. And again, my thought process on that was just a simple yes. We're seeing the EU, even though they're saying they're not ready to, I guess it's the G7, they're not ready yet to release their strategic reserves, but they're having the conversation. They're letting everybody know that it's there. We're probably going to see more coming out of the Trump administration to keep oil prices down as well. That's my expectation. And I kind of think that some of the headlines are a little bit overblown. I was talking about this in the morning meeting today. It's just so crazy because the internet now and AI and everything, it's like we have more information at our fingertips than we have ever had before, but there's also more misinformation than there ever has been ever, even on some very macro related things. There were a lot of headlines that were coming out that was saying that Aramco was cutting production, but then we were seeing something else that was saying that probably actually isn't true, that they're not cutting production. They're just shifting their production strategically in order to help be able to actually release oil to the world. So that's not bearish. And then, we're seeing that the Strait of Hormuz is completely 100% closed, but is it really completely 100% closed? Because then we're seeing other headlines that, I don't know exactly how many millions of barrels, but that X amount of millions of barrels actually have been let through, and you're seeing that China has been pressuring Iran to allow oil to be able to get through. And at the same time, even though that hasn't necessarily come online yet, you're seeing that the United States government is willing to guarantee insurance for boats that want to get through, as well as both the U.S. and French Navy to be able to guide ships through. So, it seems to me that based on all that information, the degree of the spike, I'm not saying that oil prices won't remain somewhat elevated, but the degree of the spike seems overdone, especially when you consider that even prior to this weekend, oil was up, 30+% or something like that. And then we got an additional, at one point, 30% gap up in oil futures last night, 60% at that point since March 1st. Today's March 9th. It's too much as far as I'm concerned, based on the information that those headlines are telling us. So at least looking for that short-term top in oil makes a lot of sense. And then again, if being short oil right now is almost in some ways the same as being long the market, or being long the market is the same as being short oil in some ways, because they're going to be moving hand to hand, which is what always happens in these geopolitical situations. And this is where it is also really important just to know your history. History doesn't repeat, but it certainly rhymes. And just, again, having this understanding of oil topping when the market bottoms in these geopolitical situations then just leads to the question of, well, is this at least a near-term top in oil? And to me, the answer to that was yes.
When it comes to this time in the year for the market, when we talked last week, we looked back on February typically being a pretty weak time for the market, and we're coming into a seasonally strong period for the market, being the end of March and April. Does everything that's happening geopolitically change your thesis for this seasonal period, or do you feel like it might help the market?
So that the seasonality is something that I still very much have in my head for that March 14th. March 14th is usually the kind of seasonal low for this market. And the big thing that I'm watching in conjunction with that is really the NASDAQ, which, guess what? The NASDAQ, like you just said, has already turned green. The NASDAQ is now up 1/4% at this point. That's incredible compared to where the futures just were yesterday. I think that there's a real chance that this is the bottom. That right now, today, pre-market, that this is the bottom for the market that leads to all-time highs. And if that happens, it's NASDAQ that leads us up there. We're not technically at our seasonal pivot low yet, but we're getting darn close to it. And I still keep leaning on the fact that I know that they sold NVIDIA down on earnings, and I know that AVGO, which was a good report, was largely ignored. And then we had Marvell that traded really well and is, great report and is up on that report. You still have these important tech companies coming out and putting out mind-blowing earnings reports. there's only so cheap that NVIDIA can actually get. And I think that the money starts rotating right back into those companies as a little bit of a safety play. And we already started to see really this month, the NASDAQ be consistently relatively strong. So if you start to get some of these fears out of the way a little bit when it comes to the Iran situation, we're going into to the back half of March, and even more importantly, April, which is seasonally very strong. I think that the NASDAQ is going to lead us to all-time highs. So, today, I just keep reemphasizing it. There's a good chance that today was the ultimate opportunity to really pair out of shorts and get into longs. And that's a lot of what I did. I was short last week, a lot of options. I was long a call spread for the VIX. I'm out of all that. I was heavily short UPRO, which is the leveraged S&P. I got out of that into the gap down this morning and then flipped long at a certain point. I do still have some NASDAQ short, TQQQ short, as a little bit of a trade, a little bit of a hedge in case I'm wrong. But I used this morning as an opportunity to really flip to the long side. The only thing that I would note, so now you can obviously tell I'm becoming really bullish here. The only thing that I would note is that if today's low were to break at any point in the near future, this week, next week, I think that actually then becomes really, really bad. This low from today should not be able to break. And I think that similar to what I did today, we've already known from the option skew numbers that everybody had puts. Everybody was being very defensive about this market recently. I think that we're going to find that a lot of fund managers, a lot of money managers used today's down move as an opportunity in the exact same way that I did to monetize their downside, to monetize their hedges, to regain long exposure. I think that they're even chasing that long exposure up here. So what that means is, while I think that the higher probability move now is really going to be to the upside, if I'm wrong, if today is lower to break, the big difference is going to be you're not going to have people monetizing hedges, creating a floor and creating a cushion on the market. So if today's low breaks at any point in the future, everybody's got to remember today's low. It's going to be the low of the year. So it should be easy to remember. If it breaks, be careful. This market's probably going to get destroyed. But I think that that's the lower probability situation at this point. It looks like we're going up.
All right, my mic better. Is it down bad?
Maybe it's just me, but you're very quiet and there's a little bit of like a screech sound going on. I don't know if any listeners out there in the chat can.
Is this better to you?
Not really, but I don't think it's so bad that we can't understand you. So we can push.
Okay. So I wanted to ask you about the jobs report from last week, because it was obviously not good. The loss of 92,000 jobs versus an expectation for a gain of 50,000. Obviously, there's a lot happening for the market outside of jobs, but the jobs report is very important for the future of the Fed policy. So when it comes to what you saw on the reaction to that report, and especially in the Fed futures market, what do you think of the jobs report?
Yeah, so it definitely wasn't good, and we're also seeing some indications of inflation ticking back up. I don't include oil in that. A lot of people I think are fear mongering the increase in the price of oil with the increase in inflation, and there is some degree of truth to that in terms of knockoff effects. But people have to remember that energy and food are not part of core inflation, and core inflation is really what the Fed bases their decisions on in terms of increasing and decreasing interest rates. So I don't necessarily think that the price of oil in and of itself being up indicates that the Fed can't cut in the same way that it was previously potentially considering doing that. Again, there are some knockoff effects on that. Part of inflation is airline tickets. Airline tickets are most likely going to be significantly more expensive because jet fuel prices are through the roof. So there are some knockoff effects on that we need to pay attention to. But I'm a little bit less concerned, I think, than a lot of other places that I've been reading insofar as inflation ticking higher. With that said, inflation has never gotten down to our 2% target. Since 2022, and we're at 9.1%. We've been working our way lower, but we never got to 2%. And any progress that we made on inflation stopped in the beginning of 2025 when the new administration took over. And I don't see that getting better. So you do have some degree of a stagflationary environment potentially coming in, which is really concerning. Circling back to what I was saying earlier about the market, I kind of think that this is a bottom for the market. If I'm wrong, though, and the market makes a new low, which I said is something we got to be very, very concerned about if it were to happen, I don't think that comes as a result of the war. I think that comes probably as a result of the employment situation deteriorating. So it's something that you really have to pay attention to. There is also the continuing risk, whereas I am thinking that the NASDAQ is going to lead us higher. There was a really bad headline that I think got masked by all the Iran stuff that came out on Friday that basically said that, I don't remember the exact words, but it was Meta like pulling out of a data center lease, I think, that they have in Texas. So I'm like, oh, is that the beginning of
the Oracle's not they're not doing the expansion of their data center. Yeah.
Right. So like, is this the beginning of the end of some of that CapEx spend that we've all been wondering if that's going to happen? So at this point, I think that those are the biggest two risks to the market. We are at war, so there is always a one-off chance of something really, really bad happening in a war situation. And that would be more of like a gray swan, black swan event that you do have to keep in the back of your head. But I'm more concerned about a stagflationary environment, really, with employment deteriorating because retail has been such a massive buyer of the stock market, and the potential of all of a sudden the NASDAQ bid and the relative strength runs dry and doesn't give follow through because these Mag 7 companies start to pull back on their CapEx spend. And maybe we saw a little bit of a taste of that on Friday. So those would be the big risks to pay attention to, but let the technicals be your guide. And right now, the fact that we've bought this market up from how far down we were to new year lows to flat to positive, depending on which index that you're looking at, I think potentially marks a major pivot low for this market that could accelerate us to all-time highs.
All right. So when it comes to this market, what is some of the stuff you're looking at, maybe ideas, charts that interest you, etc.?
Microphone sounds good now.
Okay. I'm disconnected and reconnected. Good.
Cool. So some of it's kind of late now because like you really needed to be doing some of this stuff this morning. But there were some things that I really liked on the dips this morning. So first of all, shorting oil, buying the indexes, but also buying semiconductors into the gap down this morning. Jets, which is the airline ETF, into $24 was something that I started talking about a little bit on Friday. The low today is $23.90. It was a massive day 4 down this morning with a huge amount of extension, and $24 is a previous support level going back to last November. So that was really on the radar. Emerging markets, EEM ETF, starting to buy some of that up because that was getting pretty, extremely downside extended as well. And keep in mind that the emerging markets is where a lot of the money has flown, has moved into over the course of this year. It's kind of been moving out of the United States and into the rest of the world. So I think that those were some really good dip buying opportunities this morning. At this point, because we're talking in real time here, it's very hard. There's still a moderate degree of extension to the downside, a decent degree of extension to the downside at the index level. There's room for us to bounce. But if you're only putting your longs on right now, you're really chasing price. We're $10 off the low in the SPY. So if you're looking for new ideas in this moment, I'm sorry to say, but you should have been in my virtual trading floor this morning for the morning meeting because you would have got them all there. And otherwise, just be patient. The market will reset up. Markets are an opportunity creating mechanism. You don't have to be able to capture every opportunity whenever it's there. But honestly, a morning like this morning, if you've been trading for a while, you should be having a really good P&L day today because there was just so much opportunity to be able to capture this morning and be able to hold it for the follow through that we're actually getting. Look, don't get me wrong, especially when I was a newer trader, I had plenty of trading sessions where I missed out on days like today that were just massive, massive opportunities. And it's okay. It's part of the learning process. Like I said, markets are an opportunity creating mechanism. But for guys that are experienced, you should really be up good money today. And if you're not, you should be doing a real review on why you're not, because the opportunity was there.
When it comes to like a morning like this, you were up at 2:15 your time. Are you always checking the futures on like a Sunday night before you go to bed to see if there's anything you need to be doing, or like what made you be up at 2:15? Like what happened and you were like, this is worth me staying up or waking up early?
I tend to be up pretty early anyway, just as a normal start of my process, because I'm regularly swinging 20 to 30 names, and I just want to get in there and not miss any opportunities. I'm usually up at like 3:30 local, sometimes 4 a.m. local time. 2:15 obviously was even earlier than that, and especially when you add daylight savings onto that, I'm really tired right now as we're doing this, but trying to keep a smile on my face because the P&L number looks so good as a result of me getting up this early. But to answer your question, I try pretty hard. I try pretty hard to never check the futures, to be honest, and that's kind of something I've learned over experience. I'm definitely not perfect at it. I do check them, but I try not to, because there's nothing I can do. I don't trade futures. I trade stocks. I trade ETFs. I have access from 4 a.m. Eastern to 8 p.m. Eastern, the full pre and post market. I know at some point soon we're going to be getting these 24-hour markets, and that's probably going to be a little bit of a game changer. But my whole thought process is, why am I giving myself stress when I'm supposed to be going to bed and getting rest? Because the rest to me and having my mind be sharp is the most important thing. Why am I going to put undue stress on myself? Maybe the market futures are moving in a way that's very against my swing positions. I don't want to be lying in bed calculating how negative my P&L is going to be. So I really try, as a general rule, just to not look at the futures. On these really extreme situations, like when we had silver, I mean, this has been a year, we're only March 9th. This year has been like just so crazy, like the silver move, the software move, the consumer staples on the upside. Now this oil move, like I feel like I've traded a decade in this 2 months and a week so far. It's really crazy. But on a night like last night, the second that the market futures are opening, I'm having people texting me from all over the place. Do you see oil? Do you see oil? And it's like, better go fill up your gas tank before the guy working behind the cash register is told to go increase the prices, because that's happening really quick. So those conversations were just there. It was impossible not to look. And I had started a very small oil short as kind of a feeler on Friday. And even that very small oil short, I was like, wow, I'm going to be down a lot for such a small position, because this thing is probably going to be gapping 20+% against me. So I was like, all right, I need to really make sure that I'm up early today, get up and manage the position, because I also thought even last night, I was like, oil futures up 20 to 30%. This is a massive, massive shorting opportunity. So the first thing I did when I woke up this morning was I more than tripled my oil shorts. And by the first pre-market pullback, even with swinging some short, a small position short over the weekend, by the first pre-market pullback, I was already green in my oil trade as a result. And now as we're having this conversation, USO is my best name on the day, and to a significant degree. So don't cause extra stress. Sleep is important, nutrition is important, having your brain sharp is important. Those are the things that really, really make us money. It's being mentally sharp. It's also good preparation though. So sometimes I can sacrifice maybe not getting the best night's sleep in the world, because I'm prepared enough that I don't need to be thinking too much. I just follow the game plan that's already set for the trade.
All right. And if anyone wants to be able to work with Derrick on a day like today and get that morning meeting and get all of that insight pre-market, you don't have to wait till 12:30. You can go to t3live.com/DO live. You can work with Derrick and T3 Trading Group. Part of being with T3 Trading Group is access to Derrick's ProDesk virtual trading floor. That's where all the trading group traders work together on a daily basis. Again, that's t3live.com/DO live. Derrick, I hope you have a great rest of your day and a good week, and you're able to get some sleep as the week goes on.
Thanks. Appreciate it, Greta. Great chatting, and I'll see you next week.
All right. Bye.